Welcome everyone to Daily Mortgage Rates Live with the Mortgage Calculator. We are going to go through some live mortgage rates here today and then do a deep dive into commercial property loans, but we'll wait just a few minutes here to get started. Let us go live on all the different platforms. We are streaming on YouTube, Facebook, Instagram, and LinkedIn. So we'll give everybody a chance to jump on, give us a chance to go live on all the different platforms. Then we will get started. In the meantime, we did put the chat up on the screen. Feel free to drop a comment there on the chat. I see some people were already dropping comments there. Thank you for tuning in early. Joe, Julio, Crisita, Mark. All right. Africa tuned in. Thank you to the whole Mortgage Calculator team tuning in. We will get started here briefly. Feel free to drop a comment there as you tune in the chat, and we will get into it momentarily. All right. Looks like we are live on all the different platforms, so we can go ahead and get it started. Let's take the chat off the screen, and we will get into it. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do on this show every day is go through the actual live interest rates for different programs. And then we do a deep dive into a different topic. Today's deep dive is something we're very familiar with here at the Mortgage Calculator, which is commercial property loans. So we work with a lot of investors here at the Mortgage Calculator, and we do a lot of commercial loans as well. So our sales manager, Jose Gonzalez, with 27 years of experience as a loan officer and a realtor, is going to do a deep dive into that topic here shortly. But before we do that, what we'll do is what we do every morning, which is pull up our pricing tool and go through the actual live mortgage rates for today. So Nick, let's go ahead and pull up that pricing tool and see what the market is looking like this morning.
Alrighty. Hopefully finally some good news is translating into some changes. Let me switch my screen. And we'll see what's out for this morning. So this is our pricing tool, as Kyle mentioned. This is going to show us the general rates and the APR, including all the fees. For today, it is July 12th, just after 11 a.m. We did have some good economic news come out this morning that's going to be in our favor. Most of the rates are issued now, but I expect probably by the afternoon for more of our programs to be issued at lower as well. But let's go ahead and set up our scenario as we do every morning to compare across the programs. If you'd like a full loan estimate with all of the fees itemized that go into what you're about to see, please get with one of our loan officers. We have over 300 loan officers in 24 states for primary homes, and we can do our commercial and DSCR loans that we're about to do later today in 44 states. So for all our demos today, we'll set up our scenario the same so we can compare apples to apples. We'll set up 400,000 loan amount, an LTV of 80%, 20% down payment. We'll set the price to 99. What that means, we're going to ask the computer to find the best rate at one discount point in cost. Most of our customers are requesting that at the moment. And we'll compare our conforming conventional programs to our FHA, which is usually the second option that most people go with for a primary home. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs using alternative income. We also offer VA and USDA. VA is only for our eligible active service members and veterans. So if you do happen to be eligible, let us know. We'd be happy to quote it, no problem, but not everybody is. And same with USDA, not everybody's shopping in a USDA area. Those are only for USDA eligible properties in rural USDA areas. If you do happen to be shopping there, we can quote it quickly, but not everybody is. So we'll start today with conforming conventional. We'll set up a purchase, 30-year fixed loan, pretty standard. Primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade, and for all the demos today, we use an estimated FICO score of 760 and an estimated debt-to-income ratio of 40. So with these settings, as we do every morning, let's check out the conventional rates. All right, already some good downward momentum, and I expect tomorrow's show will be even better as we get some repricing over the afternoon. So the best option that pops up here at the top, 7.125 rate, 0.625 discount points in cost, and a final APR of 7.279. So remember yesterday we were up in a little higher there. I think it was 7.4 or something. So definitely some downward momentum, and hopefully that continues throughout today. Now, if our customer doesn't qualify for conforming for any reason, typically the next option that we go with, we'll set up the same scenario, is an FHA program. FHA does allow a little more credit leniency on different credit types of issues, as well as a higher debt to income ratio we can use. So typically a little bit more leniency here. So with everything else staying exactly the same, let's compare FHA to the conventional. Not as much downward momentum, but definitely expect to see some more updates later this afternoon. Option here at the top, 6.375 rate for 1 discount point in cost, and a final APR just under 7 at 6.967. So in this case, with the mortgage insurance for the monthly and yearly, or the upfront mortgage insurance for FHA, it's actually cheaper here for this program if our customer qualifies for both. So some great program changes they made to FHA for that MI factor that actually make it a little bit cheaper. So customers that qualify for both, definitely don't overlook the FHA. And customers that must use FHA for the leniency are definitely getting a little benefit now here. So that's a great option. Now, if our customer doesn't qualify for either FHA or conventional, most other banks or lenders don't have other options, but that's where we love to come in here at the Mortgage Calculator and present our expanded guidelines, where we have over 5,000 additional loan programs using alternative income documentation. So with everything else staying the same, we have one new option that pops up here for our non-QM, and that's where we can choose our income. Full doc is what we use for FHA and conventional. That's 2 years tax returns. So typically we would choose one of these options to select the alternatives, such as asset related, business bank statements. We have our investor programs we'll talk about for investment properties in a minute. We have personal bank statements, which is our most popular. That's the one we'll do our demo on, as we do every day. We have RSU stated, VOE, 1099, P&L, no income required at all kinds of different options. The most popular here, as I mentioned, is the personal bank statement 12-month, and that's for our self-employed borrowers. Many times our self-employed borrowers have various write-offs on their tax return and either don't qualify at all or don't qualify for as much income as they need for that house they really want. So in this case, instead of tax returns, we're simply going to use their last 12 bank statements, no tax returns involved at all, and determine a debt to income ratio of 40% in this demo using just their bank statements, the cash in the bank, rather than their tax return. So most self-employed borrowers will qualify for double or triple or even more income than they do under the tax return method, and therefore can qualify for that home they really want. So these programs are problem solvers for our borrowers. They are at a little bit higher rate for these non-QM programs, but again, they get our borrowers into the home they really want. So great option here at the top, 7.375 rate for 2.375 discount points and cost, a little bit more cost there, but a final APR of 7.487. So just a touch over conventional, and we can use bank statement income methods. There are some other options here that we can use. And as we scroll down, we'll notice there are even more at a little bit higher rates. Some of these programs that use bank statements at the higher rates may allow other options, such as bankruptcies, foreclosures, and credit events that would put us out of reach of the conventional or FHA programs. So ton of different flexibility that is afforded here. And you'll see we have dozens and dozens and dozens of options here. So please get with our team. They'll find the program that fits best for you. And again, very comparable to conventional, especially right now when conventional is seeing a lot of volatility in the rates. We love these non-QM options. Now, before we go into Jose's commercial, we'll do a more standard demo, as we do every morning, on investment properties. This is going to be just for regular investment properties, not a commercial property, right? So for standard investments, we have some great options, whether they're a first-time investor or a seasoned investor. We have some great options here. So we'll set up our demo the same as before, 80 LTV, 20% down payment. We will compare our options. First, we'll start with conforming conventional, Then we'll check out non-QM expanded guidelines, and all of the government programs are not eligible for investments, so we'll simply compare the two we have. So we'll start with conforming conventional. Everything else will stay exactly the same as all our other demos. The only thing we've edited here is the occupancy. So let's see what the conventional programs have added for a adjustment for investments. So good option here, 7.5 rate, 3.5 discount points and costs, and a final APR of 7.75. So remember, the conventional programs have added loan level price adjustments here to the investment properties. So unfortunately, the computer is not able to find a option for one discount point and cost. Therefore, our investors that ask to go to a lower cost, we really don't have any conventional options. So in this case, the lowest cost option here is still costing 3.5 discount points or $14,000 that our investors often want to deploy elsewhere. Most investors don't mind going up in rate a little bit. Therefore, for our final demo, we love to show our non-QM options, which will solve that problem. So we'll set up the same scenario, investment property, ADLTV, and we'll choose expanded guidelines, aka non-QM. And for our investment property, non-QM, our most popular option by far, and our most popular loan here at the mortgage calculator by far, is our DSCR loan. That's because it doesn't actually require any income from our borrower or any employment from our borrower. We're simply going to use the estimated rental income from the property to determine our DSCR ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows on a monthly basis, that's a ratio of 1.00 higher. And we even have options for ratios under 1.00 where the property doesn't actually cash flow on a monthly basis. So a ton of different options here. I always put 1.5 in the demo since that's the highest value so that we can see all the different options pop up. And the final thing is on our non-QM investment properties, we always have a prepayment penalty. 3 years is standard. There are loan programs that allow us to do no prepayment penalty. Those are limited and will cost more. And there are some programs that allow us to do a 5-year prepayment penalty to save some money if a borrower is going to hold the property for a long time. But 3 years is standard, so that's what we always use for our demo. So let's check out our DSCR options today. So here at the top, 8.125 rate, 0.975 discount points and costs, putting our final APR 8.191. So just a little bit higher there. Remember, conventional was at 7.75. Here we have a DSCR non-QM option, tons of flexibility, no income, no employment, for just a touch higher. So we love when our non-QM options are very comparable to conventional, and today they're even more so than usual. So definitely recommend our investors, most investors that see both options, probably 90 to 95% of them will choose a DSCR program for the flexibility, and it's almost the same rate. And of course, we solve the problem of cash out of their pocket. They didn't have to deploy a lot of cost to deploy this loan. Also, because no employment or income is required, our investors can do 1, 2, 5, 10 unlimited loans of these DSCR loans to refinance multiple properties, purchase multiple new properties. Very flexible program here. And you'll see we have tons of different options here. Some of these options at a higher rate may have different prepayment penalties options and may allow things like short-term rental income to be used, may allow things like foreclosures and bankruptcies. So tons of different options here for our team to present when you're ready to check out a DSCR loan. And this is kind of our hybrid commercial loan. Remember, this is what we're doing here was for a 1-unit residential property. So now we'll get into more of the traditional commercial offerings with our deep dive topic. Let me pull up our screen. Our deep dive topic today on commercial property loans. So commercial properties, I'm sure Jose has a couple examples. I don't want to put words in his mouth here of what types, but typically these are going to be properties like retail spaces, office spaces. The more heavy industrial use is a little bit more of an outlier. So more of a standard commercial program here that we typically offer. Obviously, there are those niches. So Jose, if you want to present your options, let's go ahead and bring those up. Still muted?
Yes.
There you go.
How's everybody doing? Thank you for joining us this morning for Daily Rates Live with the Mortgage Calculator. Definitely, commercial loans are very interesting option and offer a lot of different choices for the investors. Yesterday, we went over SBA, which is for our owner occupied properties. So today we're dealing with more of the investment, pure investment type properties, which obviously totally different realm here. And this is where it gets really interesting for our loan officers as well as our borrowers, because we consistently get requests for things like gas stations, hotels, restaurants, self storage facilities, um, 50, 60, 70 unit multifamily purchases. So that is some of the options that I'm going to give you today. And some of these things are really going to surprise you with the rates that you are able to get on these. So let me.
Especially if you compare yesterday, SBA. Remember, SBA is was what 10.75. I think was most of the quotes
Right,
yesterday.
right.
So just for context, check yesterday's episode, guys. But SBA is sitting at about 10.75, and that's about as good as it gets, right? That's a government program for commercial. Now we're talking about true commercial here. So
Correct. Now, obviously, the big you're not going to find too much of a variance in the rates except for the large multifamilies. That's where you're really going to see a big difference. It's going to be an eye opener. But the main thing to note is that if SBA is an option for the borrower, it's usually going to be a better option. Right? It's going to be higher loan to value, aka lower down payment. That's usually the objective of the investor. What's their cash on cash return? And they want to give as little cash as possible, so they have that available for other investments.
Keep
But
in keep in mind though that it's a much more complicated option and it will take a long time, right? So there's the trade off there too.
absolutely. And the one thing to note for SBA is you do have to be a U.S. citizen or a permanent resident. You cannot just be working on a work permit, which would be legally authorized to work here, but you can't be a non-permanent resident alien and be able to obtain an SBA loan. That is for U.S. citizens or permanent residents only. So that could be the scenario for your borrower. As a reason I can say that is because I just had that brought up to my attention on one of my borrowers that at the last minute told me, "Oh, I don't have my green card yet." Oh, okay. So let's get into the first options here. Would be a gas station purchase. Let me make this a little bigger. All right.
non-owner
So
occupied. Remember,
yeah,
SBA would be the only option for someone who owns the gas station and occupies it. This is for someone who owns the gas station and rents it to an
right.
operator.
Correct. So yes, most people that are buying the gas station usually want to be the operator, and it's not so much because of the gas station, but because of the convenience store, because that's really where the 40 to 50% profit margin is going to be in the convenience store versus 5, 6, 7 cents a gallon on gasoline. I mean, the high price of gasoline is not because they're gouging the gas station operator is gouging us on the price. They're just passing the higher expense to us, and they make a very small amount. It's basically what we would call in marketing a loss leader. You know, they want to bring you into the convenience store. You know, by having you buy gas. So that's why I think sometimes when I go to use the machine, pay at the machine and I can't pay at the pump, I'm like, they just want me to buy some stuff in the store. So note also another thing with these commercial quotes is that they're very dependent on the location. So that's going to change the rate. So I mean, here the rates I put are conservative. And what I mean by conservative is conservative on the high side, because the rates really could be anywhere from the low nines to 12%, right? And that's going to depend on location, loan to value, credit, experience, as an operator, as an owner of a gas station, because remember, in the commercial world, they're going to look at all these factors, and then they're going to tell you, okay, here's your rate. So, I'm just giving you some examples here, ballpark figures, and this here, for example, is at 75% loan to value, and we're looking at 11.25% rate. There's no buy down on that. These are all borrower pay transactions as well. So whatever fee is to be earned on this would be paid by the borrower. So in our gas station scenario here, we're looking at 75% LTV. So here I'm putting here our 9+ unit option for multifamily. This would be 9 to 100 units. This is a DSCR based product, and what I like about this option that we can offer you is that it is much more lenient as far as the MSA that the property is in, and all those demographic and zip code studies that most commercial outlets do. Here, with this option, you will be able to get around all of that and get and obtain a 30-year fully amortizing rate. I do have another option to show you for a similar product, but it's going to be, which I guess I'll jump to that one now so that we can keep that in context here. So you can compare the difference in that. This same, it could be 60 unit, it could be 70 unit, it could be 80 unit, but here you're looking at an 85% loan to value and a rate somewhere around 6%. These are like Fannie Mae rates because this is basically a Fannie Mae loan for multifamily. Now, the thing to note here is that it's not going to be a 30-year term. It's going to be more of the traditional commercial type loan. Could be a 25 to 30-year amortization with a 5 to 10-year term. They'll usually give you both options. The 5-year term obviously is going to have a little bit lower rate than the 10-year term, and that by that we mean that after 5 years, if it's a 5-year term, there's a balloon payment due, or you have to refinance a loan, sell the property, or if you got lots of money, just pay it off. 10-year term, same scenario. So yeah, it's great cash flowing, definitely high LTV, but the risk on that is the term, and also the fact that they're going to be a lot pickier regarding all of those demographic and zip code items that the other option does not. But if your borrower loves the rate, that's what they would go for. Self-storage unit is another type of product that we can do here. Again, you're looking at rates anywhere from the 9s to 12%. Same factors. You can go 75% loan to value on this product. And here you're looking at a 10.75% rate. Another interesting item is a restaurant purchase. Now, here with restaurants, the thing to note is that typically the restaurant is also going to be an owner operator. So if they're an owner operator, awesome. That's going to be yesterday's show, SBA. But if they're just looking to buy it as an investment, to rent it out to somebody else, a lot of times they may get it as like maybe a triple net type deal. Whoever is operating it is going to cover all the expenses, property maintenance, insurance, taxes. All they got to do is just collect the rent and make the payment. That's what they may want to do on this. But again, you can do it. Usually you're going to be looking at 75% LTV on this, and the rates anywhere from the 9s to around 12%. Now, restaurants are a little tricky though. So they are going to be dependent on the area, especially post-pandemic, when we had shutdowns, and that affected the restaurant industry, and that affected restaurant lending as well. So in some areas they're going to be stricter than in others, and that's going to be based on the historical data that they're going to have from the last couple of years. And hotels is another point where we get a lot of inquiries. We have options available for flagged hotels, like a Hilton or, like a quote unquote famous type brand, as well as boutique hotels and bed and breakfast as well. So, this is something very popular, especially for in some states like Florida, where hospitality is really big and where it really blossomed, increase in activity post-pandemic. A lot of activity for hotel purchases. So just note, we do have great options for hotels. Could be anywhere as low as 9% to 12% as well. The LTV on that could go as high as 80. This one here is at 75%, but again, it's going to depend on the specifics of the property. They're gonna delve into it. They are going to ask for financials from the guarantor. If they ask, and even if they don't ask for a guarantor, they're still going to ask for financials just to see how the principals handle their personal financial matters. Not necessarily because it's a full doc loan, because in the end, it's going to be based on the cash flow generated by the property, but they do want to see how the principals in the loan are handling their business. So we do have hotel options, restaurants, self-storage, multifamily, gas stations, and other light industrial type manufacturing is available. So look to us for any of your commercial needs, and we can get it done for you.
All right. Looks like we do have a question that popped up here. If you want to pull that question up, Nick. Joe is asking, on these 9 to 100 unit purchases, does occupancy rate affect the pricing, Jose?
Absolutely. Occupancy rate will affect whether they're going to do the loan. Usually they're looking at 90% occupancy. So if you drop below 90%, now that's on the 90%. We have another one that's 65%, but I would tell you look at the 90% number as a nice conservative number to stick to.
All right. Well, as Jose said, lots of different commercial programs. Just need to kind of dig into the exact scenario, right? Typically with the commercial, everything's going to be based, from scenario to scenario on a case-by-case basis, especially looking at the zip code and the market data, right? So except for on those 9 to 100 unit purchase program that he had pulled up, which is what's so very special about it, right? Is you're essentially have a commercial type program, but without the restrictions of the market, information there. So you can get with us at themortgagecalculator.com if you want to get a actual quote on your actual scenario. We have over 335 licensed loan officers in 24 states, and we can do these commercial loans typically in up to 44 states. Remember, we do this show every weekday at 11 a.m. Eastern time, where we go through the different live rates for different programs and then do a deep dive into a different topic every day, like we did with the commercial property loans today. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all tomorrow at 11 a.m. Eastern time for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks,
Thank you, everybody.